Federal Reserve is beginning its two-day meeting in Washington. The consensus is for the Fed to cut by another quarter point. The majority of our mock Fed panel agrees, with 6 out of the 7 members voting to cut by a quarter. Don Peebles wants another jumbo, a half-point cut, if he would vote for that if he were part of the Fed anyway. Our next guest is on the quarter side. Joining us to discuss is Julia Coronado. She's the founder and president of MacroPolicy Perspectives. Great to see you, Julia. And how do the election results and the market reaction to the results, with bond yields and stocks doing what they are, factor into the decision this week?
Yeah, so I think in the near term, the Fed is going to want to be as steady a hand as possible. They've already signaled a 25 basis point cut. It's fully priced by markets. Just execute and say less rather than more. I think that'll be the strategy. You know, bigger picture, they're going to be mulling through. They're going to be awaiting signals on the mix of policies and the timing of those policies. Of course, what can be done at the executive branch level through immigration and tariffs can happen well before any fiscal impulse. And so the timing of that is going to matter to the Fed's decision in the state of the economy. The market reaction also has mixed signals for the Fed, of course, because higher real rates certainly could be a headwind to the economy. But on the other hand, we could have an additional tailwind from a enthusiastic stock market. So, the Fed, as always, when it comes to financial conditions, they take their time, see what persists. This is a one-day move. What shakes out over the next few weeks?
Why are long-term yields rising or longer-term yields rising when the Fed's yields are falling? What is that telling you? What is one saying versus what the other is saying?
I think the way I read long-term yields is that we're building in more term premia. I mean, if you look at, there is some more inflation, but inflation that comes from tariffs tends to be demand destructive, so it doesn't necessarily leave a long-term footprint on inflation. But what we do have is a reshaping of the global order, the global economic order through trade wars, through shifting national security alignments. And that just means a riskier world and more term premia in longer term rates. A lot of Trump's policy proposals would be deficit expanding. If he doesn't ultimately get that sweep with the House, control of the House, he could implement some of those big deficit expanding policies, and that gives the market more supply that it's going to have to digest. So
those rising yields are really reflecting the possibility of a riskier, more uncertain world, right?
Yes. Okay. I think that's a fair assessment.
It's interesting you say that, though, Julia, because the drop in gold prices has people thinking the exact opposite today. And after all, the 3 wars that are happening right now all broke out under Biden's term.
Right. But I think we don't know what's going to happen with those wars. The Middle East still is fraught with conflict that's going to be red hot, even with a Trump administration. China and Taiwan is a whole new uncertainty. The future of Europe, the security of Europe now, we have to cast that in a different light. So, rather than focusing on sort of the near-term timing of these things in a bigger sense, this Pax Americana era is sort of well and truly behind us now. And it's just a world of multiple competing poles of power. And that's just a riskier backdrop.
What happens to Jay Powell?
I think Chair Powell will stick around through his full term. I think ultimately we know Trump would like to have more of a voice in setting monetary policy, but he's not going to want to roil markets even any more than they already are in terms of, he likes low rates. He's not getting them right now. But if you disrupt the Fed structure, that might actually backfire and cause even more uncertainty. So I think Chair Powell probably serves out his term. And then, then President Trump will have an opportunity to put in his own Fed chair. The vice chair of supervision is another question. Mm-hmm. Will Michael Barr stay through his term? Will he leave? That could give Trump an opportunity to reshape regulatory policy, which seems to be more of a near-term priority for them.